National Treasury Principal Secretary Dr. Chris Kiptoo has moved to reassure investors and the country that the government will not default on the much-anticipated repayment of the $2 billion Eurobond marked for June this year. Dr. Kiptoo says the government is exploring all options to ensure that Kenya's credit rating in the international financial market remains intact and attractive. Jimmy Mbogo sat down with the PS to understand how the reports are being made to ensure Kenya does not join other African countries in defaulting.
June 2024 is said to be a defining moment for the country's economy. Economic analysts say the Eurobond repayment will either make or break Kenya's already struggling economy. It is this reality that seems to have pushed the National Treasury into considering a re-entry into the Eurobond market to ease pressures of a bullet repayment that could see the country pay more than 300 billion shillings for its inaugural issuance.
We will settle the euro. And for us to handle the Eurobond, we went out for tender to get joint lead managers and the legal counsel to guide us on how to deal with the matter. We now have a joint lead counsel and a joint lead managers and lead counsel. They are working with our teams. I think today they are completing the due diligence and they are completing documentation in readiness for going to market if they determine that it is the right timing and there is an appetite for us to go to the market.
In recent months, the government has tilted more towards concessional financing from Bretton Woods institutions, the IMF and the World Bank, an indication of Kenya's efforts to mop up foreign currency to avoid piling pressure on the shilling, which continues to weaken against major global currencies.
We have made efforts. That's why we got exceptional financing through IMF. We have under the DPO, the World Bank, and we have made other measures to ensure that we raise sufficient resources to deal with the Eurobond. And so I want to tell Kenyans that, yes, it's a big payment, bullet payment, but we are doing everything possible and we think that we should be focusing beyond I think it's more important to focus beyond June.
Should Kenya opt to go back to the market, it will be the second sub-Saharan country to seek financing in the global market this year, just days after Ivory Coast raised $2.6 billion through the issuance of two bonds that are expected to mature in 9 and 13 years respectively. When the maturing Eurobond was taken back in 2014, it was worth 174 billion shillings. It has now risen to 324 billion shillings and is likely to go up further by June courtesy of a rising exchange rate.
We know that our policy on the exchange rate is one that is market determined. So it's a floating exchange rate. And when we have a floating exchange rate, we don't necessarily settle for a level. It is the path, the movement of the currency. If it is very volatile, that is not good for business. Yes, it has weakened now. And when it comes to weakening, what's happening is that it's balancing the forces of supply and demand of foreign exchange. And therefore, we don't expect in the Monetary Policy Committee coming further tightening. Just like the US, we would expect perhaps our MPC might have to wait. I don't know. I don't want to preempt.
Jimmy Mbogo, Citizen TV, Nairobi.
All right, Jimmy, thanks so much for that. Now,